the more of these that you have at 100% of their assets, the bigger chance there is for some number of them to blow up. On the other side, if Bitcoin really moons, then these are your next Bitcoin banks, and they could end up with enormous balance sheets. So it's a high-risk endeavor.
Hi everyone, welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Every episode, we spotlight quotes from listeners. Today, we have a comment responding to my recent interview with Emily Parker and Yat Siu on how Asia's crypto communities view Trump's embrace of crypto. On YouTube, name I7W says, quote, really good discussion and insights into various Asian markets. Thank you. It's always bemused me how little awareness a lot of people, probably generalizing Americans here a bit in particular, about foreign markets. Much of it seems to be reduced to tropes and assumptions. If you want your comment featured, write a review of the podcast overall, or leave a comment on our video on YouTube, Farcaster, or X. This is the April 25th, 2025 episode of Unchained. The markets are just a little chaotic right now, but when the markets close, Bits and Bips is open. Every Monday at 4:30 p.m. Eastern Time, our macro show is live streaming on X and YouTube. Tune in to catch James, Joe, Noel, Ram, and Alex, and sometimes special guests to make sense of it all. Powered by successful products like Mantle Network and METH Protocol, Mantle is driving the next phase of on-chain finance by supporting ecosystem products such as the Mantle Index 4 or MI4 fund and Mantle Banking, which brings real-world access, yield, and utility to digital assets. BitKey is the Bitcoin wallet from the team behind Square and Cash App. It's the first 2 of 3 multi-sig hardware wallet with recovery tools that replace the need for a seed phrase. Get 20% off with code UNCHAINED. An AI that speaks crypto and does the work of a team of analysts. Introducing Focal by Falcon X, bringing clarity to a world of noise. Visit askfocal.com. Today's guest is Matthew Sigel, Head of Digital Assets Research at VanEck. Welcome, Matt.
Hi, Laura.
The Bitcoin world was excited this week about a new venture involving Tether, SoftBank, and an affiliate of Cantor Fitzgerald. Tell us what they're planning.
Well, I think this is a continuation of the theme over the last year where just an accelerating number of public companies are following the MicroStrategy model and hodling Bitcoin. In fact, through the end of March, the year-over-year increase in Bitcoin held by corporations actually exceeded that of the ETFs. So there's now more than 100 firms, and I think that folks are looking enviously at MicroStrategy's premium to its Bitcoin holdings and trying to duplicate that across different markets. I guess what's notable about this one, the SoftBank Tether effort, is that it's in the U.S. market, so another large cap in the U.S., not some kind of emerging market like Brazil or, Hong Kong, which I guess have been two of the more recent, and then just the quality of the names. So Tether having majority ownership is kind of a foothold for them into the U.S. market, holding some of their Bitcoin under the U.S. regulatory nexus, and then SoftBank, as I see it, the first mega cap tech stock to step into Bitcoin in a big way. And this is not, Masayoshi Son has been CEO of SoftBank for, 3-4 decades, and it's not his first rodeo with Bitcoin. He famously bought it and then quickly sold it at a big loss many years ago. I have a long experience with Masa, and he is not afraid to change his mind and go big under any circumstance. And I think what's really unique about this one is it's not just a Bitcoin hodl strategy for Masa and SoftBank. They are also in negotiations to back the Stargate AI infrastructure project with OpenAI to potentially build a bunch of data center infrastructure in the U.S. And then SoftBank also in January acquired common equity in Cipher Mining, which is another publicly traded Bitcoin miner, and entered into an exclusive negotiating period with them to potentially lease some of their data center space for AI. So I think Masa understands now the intersection between Bitcoin, AI, and energy infrastructure, and there's a bit more of a coordinated attempt to monetize that story.
Okay, yeah. And this venture will be called 21. And as you mentioned, their goal will be to try to acquire as much Bitcoin as possible. And as the new CEO, Jack Mallers, mentioned, their goal would be to acquire more Bitcoin per share over time. Right now, they're going to be launching with 42,000 Bitcoin, which is about $3.9 billion at today's prices. What are the other various ways that 21 could acquire more Bitcoin?
I think they're going to pretty much follow the same MicroStrategy playbook, which is to issue convertible debt or straight debt, as well as more shares in the firm. And as long as the value of the stock is trading at a premium to their Bitcoin held, then they can do that accretively so that their Bitcoin can grow faster than their share count. So if you look at all of these hodlers, we're tracking, 10 or so of various market caps. They tend to trade, between a 20% premium to the Bitcoin that they hold and 100% or so. MicroStrategy is at the high end of that. And the secret sauce is to attract these convertible debt arbitrageurs who want the volatility of Bitcoin and to use their inflows to fund more Bitcoin acquisition. So it's a very volatile strategy. It's rather opaque in the sense that it's a handful of people, the CFO, the treasurer, who have to be in the markets on an hourly basis, really tracking when is the opportune time to issue more securities to buy more Bitcoin. But I don't think it's going to be, from what I've heard, it's not going to be particularly differentiated yet, or at least there hasn't been an explanation of how they might differ. But one thing that was interesting about this deal is just it was attractively priced for institutional investors who were able to buy into this company at essentially 1x NAV. So any premium accrues to those early investors, and I think that's why the stock has done so well over the last couple of days.
Well, so first of all, the press release actually does suggest at least that they might try to creatively leverage their holdings to acquire Bitcoin as quickly as possible. And so, you're right. Maybe we don't know all the details, but if they were to try to do that, what would you say would the risks be there or the opportunities?
As long as the shares are trading at a premium to the Bitcoin, which they are now handily, then they should be able to issue equity and buy Bitcoin in a way that creates this Bitcoin yield that Michael Saylor and MicroStrategy have been explaining. The risks to all of these companies is that the stock trades at a discount for whatever reason, whether that's Bitcoin bear market or some type of operational mistake or oversupply of these types of companies. And if the premium turns to a discount, that breaks the Bitcoin yield engine that underpins the whole strategy, and financing BTC via equity becomes value destructive for shareholders. So it's a reverse of the feedback loop. You kind of saw it with GBTC last cycle, and that's the risk. So, there are some countermeasures to potentially push back on that dynamic. Buying back stock or retiring debt would be an obvious one, but then you're admitting failure and shrinking. And I don't think too many investors are in these stocks for shrinkage.
Okay, yeah, and just to reference your earlier comment about the price. So at the moment, they're using SPAC that has the ticker CEP. It stands for Cantor Equity Partners, and eventually they will transition to a publicly listed stock with a ticker of XXI. And as for the price action, you're right. On this news, the price of CEP nearly doubled. So it just goes to show, this definitely got people excited about this new investment vehicle. So I wondered, so between these two vehicles, the CEP and the XXI, this is just something I didn't even understand or really know. Does it matter when investors pick that up, or is it simply like a name change? Or, I don't know what the differences would be in the structure of the two investment vehicles, like if there's risks or, thoughts
So,
around
so
that.
Yesterday was the announcement of the proposed transaction, and the new company, I believe, can start buying Bitcoin sometime in the next coming days. But the formal business formation takes some number of weeks to months, and it will culminate in the ticker change and more liquidity. Some of the early shareholders will be able to sell once that event takes place. But for someone who's buying CEP now, they don't have to do anything. They'll get their XXI shares when the transaction closes.
All right, so in a moment, we'll talk about the wider trend around these types of companies. But first, a quick word from the sponsors who make this show possible. Mantle is driving the next phase of on-chain finance by supporting ecosystem products such as the Mantle Index 4 or MI4 fund and Mantle Banking. Mantle Banking is an all-in-one fiat and crypto account that simplifies how users spend, save, and invest. And MI4 is a tokenized index fund that offers institutional-grade exposure to top crypto assets with built-in yield strategies. Together, they address long-standing frictions in financial access while unlocking a future shaped by composability, efficiency, and real-world utility. Follow x.com/mantle_official. BitKey is the only Bitcoin wallet on Time Magazine's Best Inventions list of 2024. Built by the team behind Square and Cash App, BitKey is a 2 of 3 multi-signature wallet and the first hardware wallet with an innovative recovery suite that eliminates the need for seed phrases in self-custody. Their new inheritance feature means BitKey's not just the easiest way to self-custody your Bitcoin, it's the easiest way to ensure it ends up in the hands of loved ones when it's time for it to leave yours. Learn more at bitkey.world. bitkey.world. Use code Unchained for 20% off. If you haven't listened to it yet, my episode with Emily Parker and Yat Siu has gotten quite the response. In the words of one of the Bits and Bips hosts commenting on how much information about crypto in Asia was packed into the episode, holy hell. In response to Yat's view that China should be taking the US's stablecoin stance seriously, here's what Prithvi had to say on X. Quote, "If only someone had been shouting this from the rooftops for all of the 2020s. Me. It was me, Void, shouting this." Remember, if you want your take featured on the show, please write a review or leave a comment on YouTube, Farcaster, or X. Back to my conversation with Matthew. So at this point, there are now 91 public companies, hopefully I counted that correctly, and 24 private companies that are pursuing a Bitcoin accumulation strategy. And I wondered what you thought the prospects would be for these companies as a category, and then also what would determine the winners and losers amongst them.
So as a category, we think they're going to keep emerging, and each stock market and each country has kind of its own unique rules, especially around taxes, where in many countries, investors have to pay more on their Bitcoin gains than they would on the gains from security. Japan is a great example of this, where a high income earner on Japan would be paying up to 55% taxes on Bitcoin gains, but if they were to buy, say, a Metaplanet, the capital gains would be potentially at 20%. So that's a very obvious arbitrage, and I think there are more countries for whom that model will work. But if you start to get, 5 names in one market, 10 names in a single market, then we wonder whether the premiums are sustainable. So for this deal, the SoftBank Tether deal, it was marketed to institutional investors at this very attractive valuation where institutional investors could have bought in at just 1 times NAV. And as you noted, the stock is doubled now, so it's basically trading at 100% premium. And we're tracking on a daily basis these Bitcoin premium multiples. So in our last Bitcoin chain check a month ago, we published a table that had the data for all these, and we observed that Metaplanet, although the model is very innovative and they have a really enthusiastic retail shareholder base, it was screening as very expensive compared to its Bitcoin, compared to the other stocks that are pursuing the same model. Now it's a month later, and look at the returns. Metaplanet's down 15%. Bitcoin's up 12, MicroStrategy's up 15. So we think we can add a bit of value by trading around the edges on the premiums that these stocks trade at. And that's one of the ideas around this new ETF that has recently been approved by the SEC that we hope to bring to market on May 14th, on-chain economy ETF, which will have an investable universe of any company that has a credible strategy to make money in Bitcoin or digital assets. And we've grouped the names into 10 different categories. So these balance sheet hodlers are one category, which presents very high beta to Bitcoin, very high volatility, and maybe I don't know, a 5 to 15% weight, say, in a more diversified strategy. And we're going to try to choose the cheap ones that have a process to add value to their existing Bitcoin stack.
Okay. Yeah. It sounds like there's a lot of, thoughtful metrics that you can take a look at. And I just wanted to mention for those of you who were maybe had your jaws on the floor about the 55% tax in Japan on crypto returns. This was actually just discussed in the recent episode we did on Asia on Tuesday. And yeah, there was a ton of eye-popping information in there about the crypto scene in Asia. So Jack Mallers is a well-known Bitcoin proponent who will become CEO, and he is also CEO of Strike, which is a Lightning company, and he'll actually keep that position as well, following a trend of another famous Jack in the crypto world. But I wondered what you thought about his skills and how those would translate to running a company like this.
Yeah, I think part of the secret sauce of these Bitcoin hodlers is just the retail-facing communication, something that SoftBank obviously excels at, and I think Jack Mallers will bring some of those talents to explaining the strategy, getting eyes on the company, and maybe some partnerships. The company has a CFO who is a capital markets, treasurer type, and he may be more active in actually pulling the trigger, deciding when to pull the trigger on some of these capital formation ideas like issuing convertible debt or issuing more equity. And that is really, these are kind of mini hedge funds sitting within publicly traded businesses. And so getting comfort that those trigger pullers have the requisite skills and don't blow the strategy up is a big part of this strategy, and why I think your viewers should be careful with position sizing in these types of names.
And who is that CFO?
His name is Steve Meehan.
And what's his background?
Investment banker. I can't remember what firm he was at previously.
Okay. So one other thing I noticed was Ryan Watkins of Synchrony Capital tweeted about 21 saying, quote, "One is an outlier, two is a trend, dozens starts to look like a bubble, like bubble behavior." And then he wrote, "Can already see the headlines of all these levered clones unwinding years from now." What did you think about that? Do you think it's likely that this scenario that he painted will play out? Or how likely do you think it is?
I think it's definitely possible that a number of these can just blow themselves up through mistakes and volatility. Yeah, I kind of in thinking about SoftBank. SoftBank has almost $200 billion in net asset value between SoftBank and the Vision Fund, and there's 400 different companies that kind of sit under that umbrella. So this investment from Masa, $900 million, it's about 0.5% of the net asset value of his holding company, which from our perspective, that's often what we tell clients is start with 0.5% and then dollar cost average in, get yourself to 2, 3, 4%. If all of those 300 companies that sit under SoftBank and Vision put 3% of their balance sheets into Bitcoin, that would be $5 billion roughly of cumulative Bitcoin buying. Here, he's choosing to do it through one company, putting 100%. And I think, remains to be seen. I guess I agree with Ryan that the more of these that you have at 100% of their assets, the bigger chance there is for some number of them to blow up. On the other side, if Bitcoin really moons, then these are your next Bitcoin banks, and they could end up with enormous balance sheets. So it's a high-risk endeavor.
Yeah, and then I did see another interesting take, which is going to go into a little bit of historical context and nuance. So we won't dive like super deeply into that, but you must have seen, because this went viral, Jeff Park wrote up an investor note and he put the alliance into historical context. And he talked about Japan's financial history, especially with the US. He said that SoftBank is, he called it a de facto sovereign wealth fund. But then he talked about how, Tether has played this really interesting and different role where it's been exporting dollars to meet global demand. And he said, quote, the emerging alignment between SoftBank and Tether via Cantor Fitzgerald marks a critical geopolitical financial inflection point. These two entities are mirror images shaped by dollar hegemony. One, a beneficiary of dollar weaponization, minting synthetic dollars in regulatory gray zones. That's Tether. The other, a byproduct of that weaponization, forced into compliant but excessive leverage to escape domestic stagnation. I wondered if you had any thoughts on what he was saying there, because I do think we are at this inflection point where stable coins and the US dollar and crypto are sort of in this interesting seesaw. And what happens here is anybody's guess. But what were your thoughts on what he said?
SoftBank is infamous for borrowing from Japanese banks, and the interest rate in Japan is the lowest in the world. Warren Buffett's also raised yen debt, so it's not like they're the only company that's doing this, but they have had an extremely low cost of funding, and it's a balance sheet that I agree is like hard to replicate outside of Japan. And I agree that it's notable for Tether to gain a foothold in the U.S., where a growing part of their asset base will now have that U.S. regulatory nexus, which makes them eligible, I think, for partnerships and more business activity onshore. So yeah, I think it's a sign of the times. It's a major, major deal. First mega cap tech stock to get into Bitcoin. I don't think it's going to be the last. And it's a founder-led publicly traded company. So my guess is that those will be the types that adopt Bitcoin over time. Some of these shareholder proposals for Microsoft, for example, just the ownership is too fragmented. The CEO is not a founder. He can't drive change as quickly as the founders can.
So what kind of investors do you feel like would be attracted to these types of investment vehicles?
Risk-seeking investors who want leverage without having to borrow their money themselves. Those are the two obvious ones. But then, you get into that's who has an appetite for the common equity. But as we've seen from the MicroStrategy convertible bonds and then their perpetual preferred securities, that's where you start to the investment universe widens, and you get hedge funds that are running convertible bond arbitrage strategies, or preferred security investors, which tend to be pension funds and other kind of long duration market participants. VanEck has a preferred securities ETF, which has $2 billion in assets. It yields like a high single-digit dividend yield, and that fund began buying some of the MicroStrategy preferred securities in March. It's now a 2% weight across the MicroStrategy. In that fund, I noticed that the BlackRock preferred ETF also started buying. So I think that's the idea with these kind of quasi-Bitcoin securities like the convertible debt and the preferred securities, is that it's a totally different type of buyer who may be interested in these, but in the end, it drives Bitcoin acquisition, capital formation from MicroStrategy. Even if I can diverge and talk about bit bonds, the idea to issue U.S. government debt with this Bitcoin component, where the U.S. Treasury would offer $100 of treasuries and $90 would go towards kind of working capital and paying bills, and $10 would just buy Bitcoin and hold it. And then at the end of the 10 years, the Bitcoin is returned to the bond buyer, but there's some type of cap to their upside. And after a certain cap, the gains get shared 50-50 between the U.S. government and the investor. And I think that's like a very innovative structure for, if it's actually called a treasury, and it gets the same risk weighting as a treasury, then there's all types of buyers who might be interested but who can't own Bitcoin directly. A very sophisticated investor or even a moderately sophisticated investor could just duplicate that strategy, right? You don't need the US government to buy 10% of Bitcoin. You can just buy $9 worth of treasuries, $10 worth of Bitcoin. You wouldn't have the same upside cap where the US government takes 50% of gains after a total return of X. So that's the weak point in these strategies, is that someone who has a lot of time can just replicate them at better economics. But for investors who need to follow a certain benchmark and the security needs to be labeled in a certain way, that's where these kind of combo securities can widen the total addressable market for Bitcoin in, I think, a very constructive way.
All right. Well, what do you think of the timing of 21's launch into what is basically a Bitcoin bull market versus when MicroStrategy started in 2020? It was definitely a much more bearish time. It was in the early days of COVID. How do you think that will affect their performance?
Well, they were shopping this deal when Bitcoin was a fair bit lower, and it took a while to close. So I don't know which is the chicken and the egg. Maybe people got word of this deal and thought, oh, Bitcoin's going to rally on this, and then started buying Bitcoin. But definitely selling a deal like this into a rising market is the way to go. And that's why one of the downsides of MicroStrategy and other names like this is that they tend to buy Bitcoin at local peaks, because when the Bitcoin market is really frenzied, that's when they can sell shares at the market, and retail investors and others will take up those shares without a problem, expecting further gains. So when you look back at MicroStrategy's Bitcoin purchases, they're not particularly well timed. They would have been better. They would have made more money through just a simple kind of time average purchase rather than really striking when the iron is hot. But because of this reflexivity with the equity component, it's just the way that it has to get done.
Oh, that's interesting. And so not that anything we say here is investment advice, but how do you think investors should evaluate whether or not this makes sense for them versus, investing in like a spot Bitcoin ETF or MicroStrategy or literally any other Bitcoin related investment?
Yeah, well, I can tell you how I'm going to approach it with this new fund that we're going to launch, where the investment universe is 130 plus stocks, plus crypto ETFs up to, say, 25%. And we're trying to target a certain volatility across the entire portfolio and a certain beta to the Bitcoin price, depending on our view of the Bitcoin price at any given moment. So I think investors just should be aware that these stocks are twice as volatile as Bitcoin, many of them. And that feels really good on the upside, but on the downside, they could lose 90% of their value in a bear market, and I wouldn't be surprised about that at all. And so it's about managing the position size would be my advice.
All right, great. Well, thank you so much for coming on Unchained.
Thanks, Laura.
Next up, could a crypto market structure bill be coming sooner than expected? It seems so. Unchained executive editor Steve Ehrlich briefly interviews our regulatory reporter Veronica Irwin about this news.
Hi, everyone. Thanks for tuning in. I'm here with our regulatory reporter, Veronica Irwin. And Veronica, you published an interesting scoop yesterday about some of the, dynamics and challenges associated with Congress trying to pass the first major piece of legislation to regulate the entire crypto market. What were your key findings?
I mean, the biggest part is that we might see a discussion draft of this bill as soon as this week, which is really remarkable when you think about how complex legislation to regulate the entire crypto industry really is. And also, how different the various opinions from industry that members of Congress and regulators have been hearing might be, or we would assume are in those meetings that happen behind closed doors. But several sources that I spoke to, it seemed like all of a sudden there was kind of this overwhelming consensus that, yeah, we might see a discussion draft as soon as this week. That does not mean the bill will be formally introduced. A discussion draft is kind of this non-mandatory kind of intermediate stage where Congress releases this is the bill we're thinking about introducing. One of the sources I spoke to was expecting a 48-hour comment period. And then people could submit comments, and then after that, they would formally introduce the bill, which marks the first stage of actually, getting a bill passed. To be specific, it's apparently the House Financial Services Committee that is expected to introduce legislation, though we would imagine, or release a discussion draft, not to contradict myself, but we would imagine the Senate banking will be, something similar as we see with the stablecoin bill.
There seems to be a real sense of urgency, especially emanating from the White House, to get something done before the August recess. Could you expand on that a little bit? What role in particular is the White House playing in this?
Yeah, it's interesting. I mean, in today's political climate, like this is something that stretches far beyond crypto. The Republican Party can't go too much against what Trump wants, and Trump is pretty involved in directing Congress on the issues that he cares about. Trump has been pretty outspoken that crypto is very important to him. It's something that he campaigned on. He has several large donors that are giving to his campaign, or that gave to his campaign and gave to his inauguration fund. And he thinks this is important for keeping, American innovation at a pace ahead of a lot of other countries that we compete with around the world. So this is something that he has considered a top priority. And though publicly he only said that he wants a stablecoin bill on his desk by August, apparently privately the White House has been urging Congress to also pass a market structure bill by then. And last week, Bo Hines actually came out and said that in an article for a different publication.
It seems to be the industry and at least some people in Congress have been trying to pass something akin to a market structure bill for years, going all the way back to the Token Taxonomy Act. There's always been problems because over one key issue: when is a token a security and when is it a commodity? Because that would delineate which federal regulator, the SEC or CFTC, would have primary oversight. I know one thing that was interesting in this story is that you found that this debate kind of took on a new dimension. Could you explain that, please?
Yeah. I'm sure a lot of people that are watching this will remember last year, there was the Fit 21 bill that passed through the House, passed the House floor, just didn't make it through the Senate and to the president's desk. But that's like the closest that we've gotten to passing a bill that, legislates crypto market structure. And even though, what tokens are securities and commodities is technically only one piece of it, it is kind of like the most important piece of any kind of market structure bill. There was a test that was included in Fit 21 that would have solved that focuses on things like, does anybody have more than 20% of the total supply of tokens? If they do, then that's more of a security. That's something that should be regulated like a stock, for example. Or if there's less than 20% ownership, along with a couple of other tests that I detail in the article, it should be reviewed as or treated like a digital commodity that would be overseen by the CFTC and essentially kind of more lightly regulated. That test seemed a little bit problematic to folks, and people thought that it incentivized entrepreneurs to walk away from their project really early on. When we look at like the life cycle of a blockchain project, it's very common for a startup to kind of start with a small founding team and maybe a couple of investors, and they own most of the token supply and they decide how this thing is built. And it takes a couple of years to figure out, what the product market fit is. And for like a large amount of consumers or retail traders to, use this product to buy the token, et cetera. And so it looks like this bill will be different from Fit 21 in that there will be a slightly different test for deciding whether something is a commodity or a security that doesn't incentivize entrepreneurs to walk away from their project so early on. So like one of the tweaks is instead of looking at does one person or one entity own 20% of the total supply of tokens, it's more like does one person have more than 20% of the voting power to change how this program works? Can they unilaterally block people from using their platform and, change how the piece of technology works on their own without any input from the community? If they can, maybe that's something more like a security. And if they can't, maybe that's something more like a commodity. So that's my sources were basically able to kind of outline what that test is. I would encourage people to read the article to get all the technical details. And of course, we won't know for sure until we actually see this discussion draft, but kind of I tried to give us at least like an idea of where this bill might be going.
Great. All right. Well, thanks so much for explaining that further. And for everyone watching, to see more of Veronica's terrific reporting, please check out unchainedcrypto.com.
Don't forget, next up is a weekly news recap, today presented by Unchained producer Pam Majumdar. Stick around for This Week in Crypto after this short break. Picture this. The crypto market just got wrecked by billions in liquidations. You need to figure out what happened and what's next. But where do you even start? Meet Focal by FalconX, your AI-powered crypto analyst. It's like having a legion of experts at your fingertips, ready to break down market-moving events, chart DeFi protocol TVL, or explain why Solana mindshare is rising. Get clarity in a world of noise with Focal. Learn more at askfocal.com.
Welcome to this week's Crypto Roundup. In today's recap, we cover Vitalik Buterin's bold proposal to overhaul Ethereum's engine, a wave of crypto firms eyeing U.S. bank charters, and Mantra's $82 million token burn to restore trust. We'll also dive into a brewing regulatory clash in Europe, lawsuits shaking up Matter Labs and Meteora, and the crypto industry's big money backing of Trump's inauguration. Plus, we've got updates on the Lazarus hack funds going dark, BitGet's Voxel market rollback, and a dinner invitation that's turning Trump's meme coin into a golden ticket. Thanks for tuning in to the weekly news recap. Let's begin. Vitalik unveils plan to replace Ethereum's core engine. Ethereum creator Vitalik Buterin has proposed replacing the Ethereum virtual machine, the network's foundational smart contract engine, with RISC-V, an open-source instruction set architecture widely used in modern computing. In a post shared on Ethereum's main developer forum, Vitalik described the EVM as a long-standing, quote, scaling bottleneck, and outlined how RISC-V could simplify and enhance the network's execution layer. Quote, transitioning Ethereum to a RISC-V architecture will greatly improve the efficiency of the Ethereum execution layer, he wrote, calling the move a potential alternative to ongoing zero-knowledge cryptography upgrades. RISC-V is already used to simulate the EVM in some zero-knowledge systems and offers native support for encryption, which Vitalik sees as a path to long-term scalability. The proposal comes amid declining activity on Ethereum's base layer, with average transaction fees at their lowest since May 2020. Developers would likely explore the transition over an extended timeline, similar to prior long-term initiatives like the Beam chain. Crypto firms eye bank charters amid regulatory shift, Wall Street Journal. Several leading crypto firms are preparing to apply for U.S. bank charters as lawmakers weigh new stablecoin regulations, according to a Wall Street Journal report. Circle and BitGo are actively pursuing licenses that would allow them to operate under a banking framework. Coinbase and Paxos are also considering similar steps. The moves come as Congress debates the Stable and Genius Acts, which propose stricter oversight of stablecoin issuers and would require federal or state-level licensing. A bank charter would allow these firms to handle deposits and issue loans, but would also subject them to rigorous federal compliance requirements, including anti-money laundering protocols and reserve standards. The push follows the Federal Reserve's 2024 decision to deny Custodia Bank access to a master account, highlighting the ongoing challenges crypto firms face in integrating with traditional finance. John Patrick Mullen, CEO of real-world asset blockchain Mantra, has initiated the burn of 150 million OM tokens valued at approximately $82 million in an effort to restore community confidence following a dramatic market collapse. The token burn follows an April 13 crash in which OM's price plummeted over 90% in under an hour, wiping out more than $5.6 billion in value. Mullen's move comes amid allegations of a potential, quote, rug pull, which he has firmly denied. Quote, this is a first step in rebuilding trust with the community, but far from the last, Mullen wrote on X. The burn represents 99.5% of Mullen's OM holdings, with only 800,000 tokens remaining in his possession. Sent to an irretrievable address, the tokens are permanently removed from circulation. Mullen said he would not support any future attempt to recover the burned tokens. ECB pressures Brussels to rethink crypto rules. Tensions are rising in Europe as the European Central Bank calls for urgent revisions to the EU's Markets in Crypto Assets Regulation, MiCA, warning that U.S. policies under President Trump could threaten financial stability across the bloc. In a policy paper obtained by Politico, the ECB expressed concern that American support for crypto, particularly dollar-backed stablecoins, could trigger capital flight and economic disruption in Europe. The bank highlighted pending U.S. legislation, including the Stable and Genius Acts, as factors that could expand the dollar-denominated stablecoin market tenfold by 2028. The European Commission has rejected the ECB's assessment, arguing that the risks are overstated and current MiCA provisions are sufficient. Quote, "The risks arising from such global stablecoins seem to be overstated and are manageable under the existing legal framework," the Commission stated in a briefing distributed during an April 14 meeting of EU finance officials. Atkins pledges principled crypto strategy as SEC chair. Paul Atkins has officially taken the helm as chairman of the U.S. Securities and Exchange Commission. Sworn in on Monday, Atkins brings prior SEC experience and a deregulatory philosophy that contrasts sharply with his predecessor, Gary Gensler. Atkins outlined his vision during the swearing-in ceremony, pledging to construct a, quote, rational, coherent, and principled approach to crypto oversight. He emphasized collaboration with Congress and industry stakeholders to establish a stable framework for digital asset regulation. Under Acting Chair Mark Ueda earlier this year, the SEC created a crypto task force to foster dialogue and reassess enforcement practices. That momentum is expected to continue under Atkins, who supports clarifying crypto classifications and easing restrictions on stablecoins and mining activities. Matter Labs and Meteora hit with lawsuits. Two blockchain firms are facing legal action in separate New York courts over allegations of intellectual property theft and fraudulent crypto schemes, shedding light on growing scrutiny within the crypto industry. Matter Labs, the developer behind the Ethereum Layer 2 network ZK Sync, has been sued by defunct digital banking platform VanEck, CoinDesk first reported. Filed in the New York State Supreme Court, the complaint alleges that former VanEck developers Alexander Vlasov and Peter Korolev used proprietary plasma-related code to secretly establish Matter Labs. The suit claims the technology was misappropriated while the two were still employed at VanEck and working on Ethereum scaling solutions. Matter Labs has raised over $450 million in venture capital and is now one of the largest zero-knowledge projects in crypto. A spokesperson told CoinDesk that the lawsuit was, quote, entirely without merit, insisting that, quote, ZK Sync is original technology. In a separate case, Solana-based decentralized exchange Meteora and its CEO, Benjamin Chow, are being sued in U.S. District Court for orchestrating what plaintiffs describe as a pump and dump involving the M3 meme coin. The class action suit alleges that Meteora executives, along with venture partner Kelsier Labs, used more than 150 wallets to secretly acquire 95% of the token supply before launch in December 2024. According to the complaint, public trading was initially restricted, allowing insiders to inflate the price through coordinated trades. The price crashed shortly after their mass sell-off, resulting in an estimated $69 million in investor losses. Crypto giants fuel Trump's inauguration with big dollar donations. A newly filed Federal Election Commission disclosure revealed that several major crypto firms and industry leaders contributed significantly to President Trump's inaugural fund, helping raise a record $239 million. Among the newly reported donors are Solana Labs, Uniswap founder Hayden Adams, and NFT giant Yuga Labs. Solana Labs contributed $1 million. Adams, despite previous support for Democratic nominee Kamala Harris, donated over $245,000. Yuga Labs added $100,000, just weeks after the SEC closed its NFT investigation into the firm. Other contributors include Consensus and Cypherium Blockchain, each donating $100,000 or more. Previously disclosed donors such as Ripple, Coinbase, and Circle also gave seven-figure sums. Many of the firms had representatives at the March 7 White House Crypto Summit, held shortly after the administration moved to pause or dismiss multiple SEC enforcement actions against crypto companies. Bybit CEO Ben Zhou revealed that over a quarter of the funds stolen in February's $1.4 billion hack by North Korea's Lazarus Group have, quote, gone dark. In a post on X, Zhou stated that 27.6% of the stolen Ethereum has been laundered through privacy mixers and is no longer traceable. He confirmed that 68.57% remains trackable through blockchain forensics, though only 3.84% has been successfully frozen. Zhou identified Wasabi as the primary mixer used, with additional transfers routed through CryptoMixer, Tornado Cash, and Railgun. BitGet to reverse voxel trades after suspected manipulation. Crypto exchange BitGet will roll back trades in its voxel/USDT perpetual futures market after detecting, quote, abnormal trading activity that triggered its risk control systems. The price of voxel, the native token of the Polygon-based RPG Voxy Tactics, surged 127% in 2 hours on Sunday, followed by another 100% spike. Trading volume soared past $12.7 billion, briefly surpassing that of Bitcoin on the platform. The token peaked at 13 cents before falling back to 8 cents early Monday. BitGet said certain accounts, quote, potentially engaged in market manipulation, and temporarily suspended related accounts, halting their deposits and withdrawals. Quote, to ensure a fair and secure trading environment, BitGet will initiate a rollback of regular trades within 24 hours, the exchange stated. Affected users will be eligible for compensation. Time for fun bits! Trump meme coin buys you a seat at the table. Forget campaign donations. Now it's crypto that buys you FaceTime with the sitting president. On Wednesday, the Trump meme coin surged 75% after revealing that the top 220 holders will be treated to a private gala dinner with President Trump. The top 25 get even more, a special reception and, originally, a, quote, VIP White House tour, though that White House bit was quietly scrubbed from the site. Hold the most tokens the longest and you're in. Fall short and you might walk away with a Trump NFT. Not exactly stake and state secrets, but hey, collectibles count too. Critics are calling it a, quote, pay-to-play scheme dressed up as a meme, while the market just calls it Wednesday. Meanwhile, insiders' lockup expired last week. Coincidence? Maybe. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.beehive.com/subscribe. That is unchainedcrypto.beehive/subscribe. And sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin with help from Matt Pilchard, Juan Aranovich, Megan Gavis, Margaret Curia, and me, Pam Majumdar. The weekly recap was written by Juan Aranovich and edited by Steve Ehrlich. Thanks for listening.